Hello everybody, McGee Wolf here, back with another video with an important message about the mortgage market and to give you an update about what's been going on. Today is May the 1st of 2020. It's been a few weeks since we've talked, but a lot has been happening and what a wild ride it has been. So I just want to share with you a little bit about what's happened and what I think is next. So I think the first thing you need to understand, and there's been a lot of discussion about this, is the word forbearance. Well, it is here despite all of the anxiety in the mortgage market that this has created. They have not changed the foundational principles of the CARES Act, which allows people that have a Fannie or Freddie back loan to request forbearance and not have to make a mortgage payment for 6 months and have it extended for another 6 months. And the part that really is so discouraging about it for those of us in the mortgage industry is that you don't have to show a hardship. And that may sound great on the surface for everybody, but in reality, there are some real downsides to it, and you need to make sure that you really need to request forbearance and not just take it because it'd be fun not to have to make a mortgage payment before you do it. Now, what has been the impact of this forbearance situation on the mortgage market? Well, here I just read something today. Our nation's largest mortgage servicer, that means who you write your checks to every month, is expecting that up to 20% of their book of business will request forbearance. Well, they have 3.7 million loans in their book, so that equals 740,000 mortgage payments that they won't receive for at least 6 months. Think about what that's going to do to their business. Most businesses can't survive that. And what the biggest issue with it is that every other area of complications or stress that our society is facing right now financially, the federal government is doing all they can to step in and help give money, advancing funds to small businesses, to individuals. But there's this one segment that's controlled by an entity called the FHFA, Federal Housing Finance Association, and a man named Mark Calabria is in charge of it. And he is not in favor of offering assistance to these servicers. It is affecting interest rates, it's affecting the overlays, it's affecting the investors and what they're willing to lend on now. I've called my congressman. You should call your congressman too. It matters and it helps. So please, this forbearance issue is very important to our industry, the overall real estate community. Realtors and lenders, we're like this. We're hand in hand. We need each other. So please do all you can to bring the forces to bear to give these servicers some relief. It's very important. Now, let's take a look at the graph again over here to show you what's happened in the last couple of weeks since we last talked. Right around the end of March, the market has calmed quite a bit. The Fed stepped in and started purchasing mortgage-backed securities at the rate of 20, 30, 40 billion dollars worth a day. And then it started to get a little volatile, get a little out of control. And so they've backed off to that down to 8, 9, 10, maybe 7 billion per day. And the results have created a calming influence in the mortgage market, and we are so thankful for that. Their strength is okay. They should be able to get mortgages at 3.0% routinely, and many people routinely below that because of the influences that I've been talking about in this video, and will more so in a minute. The investors are still concerned about liquidity and other things in the market that pose a huge risk to mortgage companies. So, but this is definitely very good news for us. What the Fed did has calmed the market. So that's great. Okay, so as I mentioned, the investors are still nervous right now, and they're holding firm, and there are all these things called overlays that are affecting all of the whole mortgage industry. So the rules that used to not apply. There are all kind of new rules based on credit score, debt to income ratio, loan type. So don't get mad at your lender if something was available yesterday that's no longer available today. Rates are very good right now despite all of this, especially for those people who have good credit, low loan to values, and low debt to income ratios. It's a great time to refinance or buy a home. So, but for some people, you need a creative lender to try to solve it out. A case in point today, I worked up a loan scenario for a client that wanted to refinance their home and improve their cash flow, lower their mortgage payment. They have pretty good credit, a credit score just below 700, which they could qualify for either conventional or FHA, and at an 80% loan to value, which means there would be no PMI on a conventional loan. Well, because of these overlays and the restrictions that the market forces are putting into place, the loan that made the most sense for her was an FHA loan. Her interest rate was going to be right at 4% on a conventional loan, but at 3.5%. Now this is a cash out refinance. 3.5% on an FHA loan, which has PMI on it. But all told, it was a much better situation for her. And she's going to be able to save about $650 a month cash flow. So you need a creative lender to work through all the different possibilities to help you get the result that's best for you and your family. We have overlays pretty much for the first time at the lender level. There are a lot of lenders that have them now, and some lenders have overlays that say they're not going to lend anything on an FHA loan, anything below 680. We go down to 620. What should realtors do, in my opinion, right now, is that they need to get creative and embrace the change that has occurred for us. Our society, I think, has come to realize that, we don't need to be face-to-face for everything. People from the convenience of their home, they're able to get online and conduct business, with Zoom. I know everybody's heard about that, having Zoom meetings, but then virtual tours of homes. And by the way, I saw the most exceptional virtual tour that a creative realtor put together that I think is a strategy that will help people sell houses so much faster in this environment and in a future environment. If you'd like to see that video, just send me an email. I'm going to put my email address down below, and I'll send you the link. It's exceptionally well done, and it didn't take a creative video team to come do it. I would suggest you consider talking to your legal department to put together a hold harmless letter. I've got one here. If you'd like a copy of this as a sample, email me. I'll send it to you. But with the COVID situation and the litigious society that we're in, people love to sue each other. It's terrible, but they do. But if for some reason someone happens to become infected with COVID and they are able to demonstrate that it happened either at your showing or in your car, or I don't know, somewhere, somehow, you may want to have your legal department draw up a hold harmless letter for everybody to sign. I think that would be a very good suggestion to protect yourself. But what should buyers do? I think buyers still need to get very organized and hyper-focused on your credit score. Getting your credit score as high as possible. You want to definitely work with a local lender. I just ran some numbers on Quicken Loans. They're huge and very successful. But this environment, you need someone who truly cares about your loan. I think on average they're doing about 40,000 loans a month. That's amazing, and I tip my hat to them. But could you imagine if you have a complicated loan or you need special care to make sure you get the best terms on your loan and you're one of 40,000 people in their office, you're just a number. I just locked a loan yesterday for a client who'd been sitting, waiting and watching the market. Very strong client. Got him a loan at 2.875%. The market cracked open for a minute with this one investor, and I went in and locked them right away because I was paying attention, and there's no way I could serve 300 clients of my own that way at the same time. So that's like concierge service, and I recommend that in this environment right now. I think it can be absolutely essential to you. Now is a tremendous time to consider refinancing or purchasing a home. Rates can be good, especially for those of you who have your affairs in really good shape. If there's anything that we can do for you here at the Wolf Group, please don't hesitate to ask. We're here to help. We want to do all we can to help you, your family, your friends, the real estate industry as best as we can. We're always available, and have a great day.